All right, good morning, guys. Today is Wednesday, July 27th. As always, we'll be doing analysis for US 30, gold, and EU. So yesterday we had FOMC. We did do the FOMC stream, and as expected, the volatility didn't start until 2:30 p.m. So this was the 2:30 p.m. move. You can see the 2 p.m. move was ideally dead. So nothing happened at 2 p.m. But then at 2:30, that's when volatility started picking up. So I'd entered the buy on gold, but I chose to get out because the 2:30 p.m. move was coming. But I ended up at break even yesterday, but the trade shot into profit. But for today, looking at what we have, US 30, we have these two trend lines to the upside, and you can see US 30 is in an uptrend. So based on I know I did do some back testing between yesterday and today, and I'd gone over it in the morning yesterday. So looking at the last 7 years, so I want to do this for the last 10 years, but for right now, I've done it for the last 7 years. So what I'm doing, I'm just putting the daily time frame, and you can do this with an instrument you normally trade a lot. So what you'd be looking for is three things. What was the high, what month was the high of the year? What month was the low of the year? So currently, and I'll come back to 2023, but if we look at 2022 right here, the high of the year was the first week of January 2022. The low of the year was the first 2 weeks of October. So what you would want to do then is find the mid-range, so the median between the high of the year and the low of the year. So you find what month was between, or what months were between these two, the high and the low of the year. So in the case of 2022, it was May and June. And around May and June, that's when you saw this sell, this heavy sell right here, right? And then the high of the year came in October. Is it October? No. I'm sorry. High of the year, January, and then the low of the year came right here in October. So June, May and June right here was that midpoint between the high and the low of the year. And then that's when you had that reversal. Same thing with 2021. If we do 2021, low of the year was first week of February. High of the year was last week of December. The mid-range was July. Again, if we look at July here, we had this sell around here, July 12th. It wasn't a big sell because you can see ideally the whole of 2021, the whole year was trending from the low of the year in February to the high of the year last week of December. So 2021 was mostly an uptrend year, but you can see that sell that came in around July 8th. Same thing, 2020 was an anomaly due to COVID, but same rules apply. Low of the year, last week of March 2020, high of the year, last week of December 2020. Mid-range here, if we look at it, was July 2022, and you can see we had a sell on 24th July for about 27,080 to 26,080, so about 1,000 pip sell. So that was the mid-range of the whole year. So right, same thing, right? The idea is the same. So what I was thinking is like, why not use the reversal indicator? So when I put on the reversal indicator, and these are the settings because this is the high time frame, right? 0 because it's a high time frame, 30-minute and above. Since this is US 30, breakout pips is 50, breakout EMA is 9, source is closed. But you can play around with the between fast MA and close. Ideally, what of course you want sells at the top, right, and buys at the lows. So play around between the fast MA and close. For me, based off of the back testing I've done, I've seen that the close is better, other than, for example, this year, 2021, which was a trending year from the get-go. So here we do close, because here you could see you had some fake sales right here. So here what you could do if you do fast MA, so remember, fast MA will give you fewer entries and safer entries. So you can see it took off a couple of cells right there. So you could have only got like this cells and this cells, which would have ideally been better than all these cells if you're using the close. But again, right, not to say that that's gonna work for everything. So you just have to find that sweet spot and also align your strategy with other things. So looking at 2023, we have a possible low of the year, which was the last week of March, because currently the low of this period since January is March 15th, 2023. So we haven't broken that low. So to me, I see this as the possible low of the year. Now, looking back, if this is the possible low of the year and this is March, I do anticipate we will create the high of the year in December. The reason for that is I just go back based off of how I've mentioned to you guys. So I would count March, April, May, June, July, August, September, October, November, December. So those are 10 months. So what is the mid of the 10 month? So mid of the 10th month is so March, April, May, June, July, and August. So July and August is when we anticipate the possible mid range. So this actually should be July to August. So which is why I mentioned yesterday, I might have been front running the sells on US30, but you know, I never had this knowledge prior to yesterday. So possible mid-range is July and August. So we did have a year that had that. So in 2020, we did have a low of the year in March 2020, mid-range in July, and high of the year in December. So to me, and no other year has had low of the year in March, other than, you know, the last 7 years, other than January and February. So based off of the back to, because I've done up to 2016. So I do anticipate the same thing for March 2020, where we had low of the year in March and high of the year in December. So I'm waiting for a sell. So my ideal sell would be on the daily time frame. So keep in mind, even the reversal indicator, it had also given a reversal on the 4-hour time frame, but for me in this instance, I was already in the reversal for the 1 hour. So for me, the best entry here would be either the daily time frame or using the breakout scanner. Oh, gold is dying. Using the breakout scanner, having a sell on the 1 hour time frame, or what's the other one I said? Having a sell on the 1 hour time frame using the crosses indicator right here. And you can see we are far from getting that. So that's what I'm looking at. Also, one thing I forgot to go over with you guys yesterday. So you can see yesterday, these are the positions I got locked in. I got locked into 2 sells and 2 buys, ideally being break even using that automated strategy. But before heavy news, be looking at the crosses indicator. So yesterday when we were trading, I had turned off the secondary buys and sells because I was only interested in the golden and death crosses. But if I turn this on, since we're already in a sell momentum, if I turn this on and leave the buys, you can see news was right here, right? This was the 2:30 p.m. move. Look at 2:15 p.m. we had a buy signal. And I've noticed this in, I think, last CPI, maybe last FOMC as well, where using the crosses indicator, just turn on all signals. So both the golden and death crosses and the secondary buys and sells, and then see what signal you get before news happens. So this signal, unfortunately, I hadn't turned on the buys, secondary buys yesterday, because I would have said we could have taken this. Because keep in mind, based off of this strategy, what are we looking for? We are looking for the first 3 to 4 trades. What is this? I keep forgetting this. I thought about it the other day, but this is it. Right, first 3 to 4 trades, including the original cross, are most probable. So in the morning, we already had a buy right here, a golden cross buy. And then before news, like, what is it? This was the 2 p.m. candle, right? I'm sorry, the close of the 2 p.m. candle, we had a buy fire. So if I had seen this, or if I had those secondary buys or sells selected, we could have taken that. But anyway, just keep in mind for that, using before heavy news, check out the crosses indicator and see what entries it would have given. Let's see what entries would have been given on gold yesterday. I need to be remembering to check this during heavy news. So we're just waiting for the market to stabilize. So yesterday, FOMC was it this? Yeah, so it was around here. So during FOMC, so unfortunately, this one was the FOMC candle right here. So ideally you want the candles before news. So this was the 2:30 p.m. Candle, but you can see it's still, but actually for this trade, I wouldn't have taken it because 1, 2, 3, 4. It had already gone past the 4 entries. So for gold, I wouldn't have taken it, but US 30 was perfect because as you can see for US 30 here, we were at 1, 2, 3. So that would have been the second entry. And you can see later on in the night, we still have 1, 2, 3, 4. So currently the 4 entries are still running. So I do still expect US 30 to pump up. So coming back to our normal chart right here, you can see price is clearly in an uptrend. We have these 2 trend lines. So 1, 2, there's this new trend line that I found here. I wanted to draw it this way, but remember, I hate when trend lines cut through price. So you can draw it this way as well, but I don't like cutting through candles like this. So this is why I didn't originate that trend line from this lower high. So for this near upper trend line here, it's from this higher high to this higher high. So I do anticipate, so it's either this trend line that's going to give us the reversal or possibly this one that's around where I mentioned, right? 35,880 and 36,000. So for me right now, I am not looking for sales on US 30 until we get any of those 3 entries that I mentioned. Any questions regarding US 30 right now? All right, yeah, so just keep in mind those areas, 35,880 to 36,000, and put your reversal indicator on the daily time frame. I'll try and do this same analysis for gold. And also the entries for this one, I need to backtest how to enter these entries, but one way I'm thinking about it is if you enter, for example, the sell, you put the stop loss below the previous high. So for example, here, let's assume this year right here. So we had the sell here. Ideally stop loss, put it above this previous high. So this looks like a 33,744, looks like a 700 pip stop loss. So this one you could have just gotten faked out and price would have gone back down. So I think for this entries, right, we need to put like our stop losses below the previous high or the previous daily high. So for this sell as well, right here, right, if you put it above the previous high, you can see these fake outs. But if you measure this move, this is 33,772. This is a 500 pip move. So maybe an 800 pip move, I don't know. Again, you know, you guys will need to do a bunch of back testing on how to enter these trades. But yeah, so I'll be using this chart as well. So I named this chart like yearly outlook. So I'll just be using this chart to tell us where we are at on the daily time frame, and that will serve as another confluence using our trading. Gold, gold is, oh god, this is crazy. So gold is dying. Where we are at on gold, let's bring up this zones. So I don't know if anybody's trading gold, but I haven't traded gold in a minute. Let's see here. Trying to bring the zones up. So I did mention if gold goes back to 1900, we are dying below 1900. And I did mention on the higher time frames, we have a huge head and shoulder pattern. So you can see for gold, we have this 4-hour bullish zone. If this 4-hour bullish low is broken, which means gold would need to break this trend line, we are done with gold. Gold is ideally falling heavy. So let's see that head and shoulder pattern on the higher time frame. So yesterday during FOMC, they had tried to take out this head and shoulder pattern like they did for US 30, but the head and shoulder pattern is still active for gold. So you can see we can possibly, so this is 1903, right? Where the first completion of the head and shoulder pattern is. Now, if they do come back to 1900, look at how many times this 1900 has been tested. 1, 2, about 2 times right here. So if we do come back here, you can see gold can easily go to 1800 or 1828. So right now, unless you guys have any confluences for gold, gold is not something I would be playing around with right now. But knowing that this is a trend on the 5-minute, we do have a possible reversal on gold. So keep in mind the way I've always mentioned, and you can see US 30, right? Everything else, even EU is dropping. Everything else is dropping, but US 30 is not dropping just yet. And it's holding, they're holding this trend line and they're holding this 9 EMA. And for me, if US 30 does get to that zone that I've told you guys, I will short it so heavily because it will be lining up with everything that we've expected. So as much as I did take losses on the 5-minute, on the 15-minute, and the hourly, right, with this new confluence we have based off of the yearly historical data, we have another nice confluence to be following for US 30. So for gold right now, any reversals would happen this way. So we go to the reversal indicator, we go to gold right here. And then, so this is it. And then we do the 5-minute. So we would try and find our area of interest. So I like using whole numbers. So let me use 1970. I'll just use 1980. You know what? That's fine. 1978. Oh, should be it. So here we have our area of interest. Then we have the threshold right here, which for gold is 150 pips, which means a $15 move. So $15 less 78 is 63. So you can see how big of a move this is. So this is perfect. So 63. If we do get an entry during the live session, we'll see if we'll take it. So this is 150 pips. And since this is gold, I come in here, I change this. So 50, 50, since this is the 5-minute, this should be 1. Excuse me. And since we're looking for buys, would be that way. So until gold gives us a buy, I would like gold to keep melting from down here, because the heavier it goes down, the better any reversal would be. But just keep in mind, on the higher time frames, we are dropping heavy. Gold is bearish. It's already broken this lower low, this lower low, this lower low, and this lower low. So if gold keeps dropping, you know, keep an eye out on this particular trend lines. And right here, you can see gold is coming back to this. Now the daily bearish low is at, oh, I think I know what happened. We had a daily bearish low at 1960. I know we've been having, I'm sorry, daily bearish high at 1960, right? You guys remember that, right? This daily bearish high at 1961. That's been holding price from going to the all-time high from to the 2000s. So if you've traded with me the last few weeks, you do know that 1960 has been a major reason for me to be selling gold. I know I was selling gold like a few weeks ago, and it was primarily due to this daily bearish high. I have to reset the zones. So this daily bearish high overrides anything. So if gold breaks down and closes below the daily bearish low, we have the 4-hour bearish high and low that's right there, 1936 to 1929. And gold, look at that. Buyers don't have any, so same thing for US 30, the same way. If I turn on right here, sellers don't have anything to bring US 30 back down based off of where it is. I mean, we have this hourly bearish high and low, but we also have an hourly bullish high and low. So same thing, US 30 sellers don't have anything to bring US 30 back down with. If gold closes below 1927, buyers don't have anything to bring back gold back up in the long term. So that's why I do see a continuous melt for gold in the long term. But of course, there's going to be some retracement along the way. So EU as well, we do have a reversal for EU. But given that So remember the trend on FX pairs is 50 pips. So let me see, I haven't traded EU in a minute. So this would be 389. I'm calling that 400. So it would be like 1090. Yeah, so there's also a reversal on EU as well. So let me come here. But for me, I'm just gonna do one. I'm not gonna do both EU and gold. In any case, I'll probably just stick to EU. Consolidation, call this 500 or area of interest. All right, let me reply to something real quick. All right, so we have this area of interest. We have threshold right here. FX pairs is 50 pips, so this should be 1.11 right there. So you can see how these instruments are, and this is to be expected. This happens after heavy news days. All right, give me one more second. Let me pick up a call. All right, hey guys, I'm back. I'm sorry about that. So EU here, let's do this as 50 pips. So we have two possible reversals, one for EU, one for US 30. I'm sorry, one for EU and one for gold. So let's just analyze this two because those are the entries we might get. So gold, we know overall, we have a head and shoulder pattern on the higher time frames. So let's see what we do have on EU. Okay, so EU as well, we don't have a head and shoulder, but we do have the structure completion around 1.08. So you can see we have a weekly bearish low on EU. So we are coming to a weekly bearish low, and we rarely run into weekly bearish lows. So we have a weekly bearish low, literally where price is at. So all the way down here to the daily bullish low. So to be honest with you guys, I wouldn't take any reversal just yet, unless you're taking it for like 20 pips. This two instruments, so EU, looking at EU right here, for me the target for EU is down here to the daily bullish low or monthly bullish high. So in any case, I would be trying to catch sells, but given the heaviness of this drop is just too many red flags for me. But that is my analysis for you guys. EU, as much as we do have the reversal, we are rejecting from the weekly bearish low. Below that, we have 4-hour bearish order blocks and hourly bearish order blocks. So to be honest, I would rather wait to buy EU between 1.087 and 1.079. So in between there, so probably 1.0849. So knowing that, I would have wanted to catch a reversal if we did have a bullish order block here, but and you can see also, right, we have these two trend lines to the downside. So keep in mind, for example, this trend line right here, it's been retested a couple of times, right? So it is very possible EU will keep dropping to this trend line down here. So I don't see a need to risk anything, especially if you took the losses with me on US 30. This is not a trade I see any need of risking. But if it does align with any of your other confluences, feel free to go ahead and wait for buys on EU. Gold, so gold, the same thing, right? For gold here, let me go back to this larger chart. Gold, same thing, right? We just passed that daily bearish high. We are coming to the daily bearish low. So I do see continuation of gold to the downside. For any buy on gold, probably 1920. But if we do, I do see us coming back to the 1900s and breaking 1900 and falling, because you can see we have a weekly bearish order block waiting at 1880. So yeah, for me, it just doesn't make sense to catch any buys for now. And for right now, I'll just hold and save my trades for this US 30 that I've analyzed for you guys based off of this daily I'm sorry, based off of these daily entries and looking at the yearly data for US 30, shooting for that reversal July to mid-August. So waiting on the sells either on the daily time frame, either with the breakout scanner or with the crosses breakout scanner on the 1 hour or crosses indicator on the 1 hour. Let's see what US 30 gave today for the 15-minute time frame, if it gave any breakouts. But hopefully that makes sense. If you guys have any questions, you can go ahead and ask. Other than that, we'll just cut today's set. Yeah, so there was no breakout on the 15-minute today on US 30. Yeah, if you guys have any questions, feel free to go ahead and ask. If not, we'll just call it a day. But
for the
Mhm.
yeah, just a quick question. For the breakout sell on US 30, you are looking at the 1 hour?
Yes, 1 hour. Because if we go to the 1 hour, so right now, right, we do, if you got burnt by US 30 with me on 3 trades, right, you want to get that nice, highly probable trade. So you can see on the 1 hour time frame, the last time we had a sell on US 30 is Wednesday, 5th July, right? So that is 3 weeks ago. So the sell definitely is coming for US 30. I think we just got in early. I wish I had thought of looking for this data like a week ago, but anyway, the last sell on the 1 hour was 3 weeks ago. So when we do get a sell, it will be starting a new trend to the downside on the hourly time frame and hopefully on the daily time frame as well. Because keep in mind, by the time we're getting the daily sell here on the daily time frame, using the reversal indicator, we will have gotten entries on the 5 minute, on the 15 minute, on the 1 hour. So since we, for US 30, unless we have a trend, and I don't see any 5 minute trend, our best bet will be to look for entries on the breakout scanner. So on the 15-minute time, you can still enter on the 15-minute time frame, but you have a high probability of getting faked out on the 15-minute time frame. So that's why I would rather ask to wait for entries on the 1 hour on the breakout scanner, wait for entries on the 1 hour as well, right here, using the crosses indicator, right? So you can see the 200 DMA so far, right? But for me, as usual, right, I'll be re-entering this sell on the 15-minute time frame, the death cross, because I've automated an account to be taking the death crosses and golden crosses. So the question is, when this sell does come, and this sell will come on the daily time frame, are there any other indicators we have that can give us entries on the 1 hour, on the 4 hour? Yes, we do. So that's why for me, I'm waiting on the hourly time frame on the breakout scanner. So that's the closest. Ideally, because if you look at the hourly time frame using the crosses indicator, this will take a while to come by, right? Because look at where the 200 DMA is. It's 200 DMA and 9 EMA are 400 pips away from each other. And keep in mind, these indicators are lagging indicators. So it will take a while for that to come by. Looking at the breakout scanner, it's not so far-fetched because we had a possible sell that was loading yesterday, but did not. But the breakout scanner is the one that's going to give us the earlier entry. So in order of watching them, I would be watching the 1 hour on the breakout scanner and then watch the daily on this particular reversal. Hopefully that makes sense.
Yeah.
Yeah.
So on the breakout scanner, there is no way to. I was looking if there was a way to put an alert. But
Yeah, no, you can't because the breakout scanner, there's no way to put an individual alert. Currently the way it is, an individual alert based off of just one what is it called? One asset. I'll see if that's possible. Because right now the breakout scanner ideally scans for all of this. So if you put any alert, it's gonna give you an alert for everything. So yeah, I'll see if there's a way to incorporate to get an alert based off of one instrument only. So I'll see. I'll ask my programmer to see if we can get that. Yeah, I was also looking for that as well, and I was like, one has to literally keep an eye on it. Yeah, but I'll check that for you and let you know probably tomorrow.
okay, thank you, bro.
All right. Any last questions from anyone? All right. Yeah. So today has been a trying week. So for me, I took what, 2 losses for US 30, only 2% down. So that's the importance of having that. And lastly for US 30, keep in mind it doesn't have to go to this trend line, right? So as much as I mentioned 35,800, which is why I'm referring to you guys using the breakout scanner and using the daily time frame. US 30 does not have to come to 35,880. This can be the final trend line it touches. And here you can see we have a rising wedge pattern right here, which after a rising wedge, you'd expect break back down. So again, I don't trade this, especially the wedges. Again, I haven't traded them before, but I can tell this is a rising wedge pattern. And after a rising wedge pattern, you expect a breakdown to the downside. So maybe this is the current high of the year for US 30. Who knows, right? Maybe this is the current high. Before that, daily sell comes in. So I think we're going to get this daily sell maybe on Monday or Tuesday of next week. So just observe that for US 30. So US30 definitely does not have to come to 35,880 or 36,000. So which is why I've given you guys those 3 entries that are right here. Sell on the daily, sell on the hourly on the breakout scanner, sell on the hourly on the crosses indicator. So this is what I'll be using. Whichever comes first, that's what I'll enter with. And ideally, if I enter, I want my stop loss to be above the high. So let's assume this will be the high that's established. So wherever that sell comes in, I'll be putting my stop loss, so maybe above this trend line right here, above. Stop loss will probably be about 35,800. So if we get the sell here, right, that's like a 300 pip stop loss. If we get the sell here, that will be like here. And definitely I'll be going for like 4% on that particular trade, or 3%. But yeah, just trade safe and just manage your risk properly. Any last questions? Okay, and definitely use all these indicators, right? Like back tests. Always challenge yourself. Like for me, this yearly analysis is just something I thought of yesterday. And definitely you can see it gave us a pattern for US30. So use this same pattern. Whether it's on gold, if you normally trade EU a lot, I'm pretty sure you'll find a pattern because markets are normally cyclical. So whatever happens today or whatever happens this year is bound to repeat itself in future, or is bound to have happened sometime in the past. So if you find these patterns, you can easily be waiting for those swing positions to enter the trade. Also, right, use all these indicators we have, whether it's on the 4-hour time frame. See the entries you're getting on the 4-hour time frame. See the entries you're getting on the daily time frame, and you can easily get like a strategy for yourself. And you can say, okay, I'm only going to be trading 5 times a year with my funded account, and I'm going to be going for 3% risk, right? So for example, if you chose to do that maybe on this indicator, who knows how much I'm sorry, using this settings on the daily, who knows how much you could have made. So just use these indicators and stress test them. Take them even to the weekly, take them to the yearly time frame, take them to the monthly. See the entries you're getting. Ideally, what you're looking for is sells on the highs and buys on the lows. That's this, that's the basic thing you're looking for. And once you do that, trust me, you will find a pattern, and then maybe that will be your edge going forward. So as I mentioned, for this reversal on the daily time frame, play around between the fast MA and close. See what gives you a better entry. Again, you're looking for sells at the highs and buys at the lows. For me, I think close is better, but it depends. Again, it's not going to be the same for every year. So you're just looking for that optimal setting. But other than that, I will see you guys tomorrow for closing out the week. If we do get that sell at any time, I'll send it out to you guys. But keep in mind also tomorrow is Friday. And what we know about Fridays, it's either reversal or continuation days. So instead of trading tomorrow, look for trades for tomorrow today. So I normally say enter Friday's trades on Thursday, beginning of New York to mid New York. So based off of this analysis that I've given you guys, think about what makes sense. For me, I do see more continuation with gold and EU to the downside. I definitely see a short-term retracement. The question is, will that short-term retracement hit your full TP before continuation tomorrow on Friday? Because I do see gold dropping later on and EU also dropping to complete that inverse head and shoulder. I do see US30 retracing a little bit and then continuing to the upside, and hopefully getting that sell either Sunday or Monday of next week. But other than that, I will talk to you guys tomorrow. All right, bye guys.